Hi, I'm Jess from Tella, and here's 5 mistakes you need to know about before purchasing your first home. So your emergency credit card can actually be a massive mortgage killer. Keeping high credit cards and buy now, pay later facilities can actually hurt your mortgage capabilities. This banks stress test at a rate of around 8.5%. So for instance, if you have an open facility of 25K on a credit card, and even if it's a $0 balance, that will still be applied when doing serviceability checks to see how much you can lend from a bank. So what is the solution? Closing those accounts 3 months prior to applying for a mortgage can maximize your budget. So I see this a lot. You can go into the trap of trying to find the perfect home before getting a pre-approval. Conditional offers are being rejected in favor of cash-ready buyers. So without a pre-approval, you're essentially window shopping with no actual buying power. So the solution to this is actually getting your pre-approval so you can walk in with confidence to buy that first home, ready to be a cash-ready buyer and not just a tourist. Assuming that your KiwiSaver funds will instantly be available upon settlement. The reality is it takes 10 to 15 working days for your KiwiSaver provider to process the withdrawal for your KiwiSaver. So example is you're subject to finance and you go and sign your contract and your KiwiSaver funds are not ready on the day. So the solution is to apply for your KiwiSaver the moment you go under contract. Thinking that 5% deposit is actually free money, but actually there are other costs involved. So for example, you just have an LEM, which is a low equity margin. So this is a margin that's popped onto the interest rate. For example, if you're at a 95% LVR, then the interest on top of the interest rate that is currently being charged is 0.75%. So in the long run, this can cost you a lot of interest. So my solution is ensuring that in 12 months, I catch up with my clients just to see what the position is and ensuring that we could restructure to get down to the lower tier. Sometimes if you can budget yourself, then you can equate for this cost. And then when we do our review, you'd be in a better position. I had a client recently that was looking for their first home, and when they were going to these houses for viewing, the pricing listings were sitting at about $650, but when they talked to the real estate agent would be like, we're getting offers at $770. So the solution would be to research houses in a similar area, just so that you can actually see what the houses are being sold for in those areas, and you're not wasting your funds on doing building reports and limb reports on houses that you can't afford. So how I like to help my clients is by doing some research for them and so assisting them in the areas that they're wanting to buy. It just helps alleviate that stress. So if you ever need some help, it's really handy just to give your advisor an area that you're looking at buying in, and they can just do some research for you in the background. So remember, your first home is just your stepping stone. So don't let these mistakes trip you up before you get onto the ladder.